Okay, good afternoon, everyone. This is Rose. Many of you already know me, and those of you who are new here, welcome. All right, so we put together this session to help a few of you looking to see maybe an educational way of trading. And majority of you probably already taken the course, but if you haven't taken the Brooks price action course, pretty much we use all of the methods from there. And I'm going to go through some of them that I use throughout the day with my trade entries. So I combined many different methods from the course, and I have my own spin on some to find solid targets. So today is an interesting day. Obviously, we gapped up and at the open, so we are always in long, but breakouts are not all that well. And what we're forming here is actually a bear flag. So watch out here. Market is actually trying to possibly come down to 28.50, 29.50 area. So I'm gonna mark that. So here's 28.50 and 29.50. I believe that's where they're trying to go. So you can see here we're up on this, down on this, up on this, down on this, up, and we're finally coming down. So there is a wedge top here, although I'm not sure if we're finished. And generally you get these setups when you have strong gap bars above the EMA, but we did not really close with such gap bars below the EMA, and that's because we ran into a buy zone. It's a breakout test zone, okay, breakout test zone. So there are always buyers there, and they're trying to prevent this bear flag from breaking out. So so what I generally do is, if I see a gap bar like this, I measure the range and I look for areas where the sellers are sitting. Okay, and I apply these levels. So it's generally a pullback. First sellers will show up around 33%, and you can see right there they have showed up. Okay, so there was the first sell right there. But I think market will try to make its way up to the 50%. Generally, we get to test 50% of these gap bars before actually coming down. So I'm not ready to sell. So you can see here's a low one failed, and low one always fails, right? There are always buyers underneath that. And that sell bar is really bad anyway. And you can see that the buyers immediately showed up, or you could say this is the low one and this is the low two, and that's fine because this is the first time bar 29 actually went below the prior bar's low, so this is not a good low one. But then this is a low two, so they are selling. So is there some kind of a wedge here? If you're having a hard time counting, then resort to a smaller time frame, such as 2 minute, and you can see up on this, down on this, up on this, down on this, up, or up on this, down on this, up on this, down on this, or you can take the whole thing, second up, second down, and a third up. So there's a wedge here. Okay. Al likes to use the three-minute chart, I believe, because he mentions a lot in his books. So you do have a wedge bear flag there, and channel break, and a really strong strong bar. So it's probably sellers underneath. It's trying to come down and test the 36 low, and it wants to probably, this was nothing but a pullback, and come down. Now, why is this a pullback, right? Is how much the market actually went up, right? Market has been coming down. What you get here, I'm going to resort back to the 5-minute chart real quickly. So generally what I do is I count the amount of the points that the market actually moves. And if it's, so let's see, last time they closed the bar, it was around 5.75. That is not good enough to create a swing. Swing, if you read the books, if you've taken the course, 10 point is minimal swing, but these days we go for 20 points. So this does not create a 10 point, okay? So this is why bears are trying to prevent from market going higher to 10 point, 15 or 20, or maybe even further up, test the high. So they're trying to prevent that. But they also need to sell now with a second leg. So here's the first leg, they need to get a second leg. So we could continue to come down because bears over here, I want to measure this real quickly. See, this doesn't. So I'm looking for market to get down to here. So bears are looking for a full 20-point swing, okay? So a 20-point swing is, a day like this is okay. But today is different. So the price action is a little bit different, a little bit difficult to read after 11 o'clock, 11 a.m. Eastern time. We kind of go into, so say 11:30, doesn't matter. So we kind of go into, as we get closer to the lunchtime, market just goes into a tight trading range, okay? So we are in that tight trading range, all right? So the market is, so don't expect big moves, but price action is price action. So I'm gonna give the bears a chance to bring the market down to 20 point, or either 19 or 20. So this is a bear flag, and bears trying to get a major trend reversal here, but they kind of missed the mark here by gapping down below the EMA, and we're getting this grind. So to me, that's just a channel, and bears are not going to let go here, so they're going to move the market down here most likely, and then we could bounce once again from there. Or you can say, hey, I'm just going to measure the days. Let me get rid of this because we already got the 33%. So let me get rid of that. But in the meantime, let me take a trade here. So I'm waiting for bears to break the 23 low. So I'm expecting either this line or that line to be tested. So I am short below bar 31. I'm looking for a follow through. What could go wrong here? If we do not actually take out that low with a bear body, we're going to have a problem. So you can scalp a little bit. If you sold underneath 31, you can scalp here. And if you get a bear body close, you can add more. I'm a scalper generally. I love to swing, but I've already been swinging from up here. I warned everybody in Discord, my Discord, so I said this is a head and shoulders pattern with a neckline broken. So this is spike and channel, spike, pull back, and we're still in a channel. We could still come down, okay, before going back up. But now bulls are trying to prevent the breakout for bears. So we already took out the low, but that means nothing, okay? This is a bullish market, so I wanted to show this. I measured the entire range. So I'm gonna show you where we are. Okay, so here is the entire day's range from the bar 1 low to the bar 16 high. Look where we're bouncing. This is the second time we is bouncing from the 50%, but this is a disappointment. So for bears, they could not close a bear bar, but there was a good scalp here. So if you sold underneath 31, you scalp. So let's take a look at how much they scalp. So you are underneath 31, you get filled one tick below, right? So you're looking for ATR is 325, so you're looking for 2.25. That's what they got. So this is a solid scalp for S&P traders right here. And generally you sell. I generally grab that 2 point, and that used to be a 1 point, but it is now 2 point. And then I leave a runner. So my runner is not running right now. And the fact that the bears did not close a bear bar is a problem. So I could do two things. I could exit right here, okay, and I can sell the next bear bar, or I can sell again and try to break even for the runner that is failing. So I will wait to see where this bar is going to close first, because bears still looking to get down to here, because nobody wants to sell at the low of this trading range. You got a trading range here. Nobody wants to sell, so the market needs to go back a little bit, pull back, and then sell. So anybody who sold up here, there's plenty of space all the way to the 23 low. They made money by scalping from underneath 31. Okay, that's a late entry. Say they entered here, they got a lot, they got about 5 points there. But those who entered late, such as me, got a 2 points there. But no one's going to continue to sell, or the new traders will not join at the low of a trading range. Therefore, we just bounced. Okay, so that's why I said we need another leg down, and the bears are pushing for it. So to me, this area is where they're trying to get to, and this is their chance now. If they miss this chance, then I will definitely exit, because sell once is sell twice, and the second sell also fails. I have no business lingering in the market, but I am still short, and I'm still waiting for market to come and test somewhere in here. Now, market can also continue to sell into here, which is the 66%. I kind of, so here's the 33% pullback. We tested, and it acts as resistance. Now, if the bears take out the 50% of today's mid-range, okay, then they're gonna try to bring market down to here. So this is where probably buyers are. And you can see we have consecutive bars, okay, and here's a leg one, first buyers, then here's leg two after this breakout, right? So we know somewhere here there is a demand zone, and that demand zone is just about, I'm gonna take that. So we could not only reach the 20 point, we can also continue into this 66% pullback. And all this is happening, it's because you got this big gap bar along with bunch of consecutive bear bars coming after. When I see this, I look for a major trend reversal, and this is kind of fitting the ticket. Now there's small head and shoulders, but now I'm seeing left shoulder, head, right shoulder. Okay, so that means we have a neckline we are breaking. Eventually we will get back there, but we could sell once again. So that would give us a leg one, pullback, leg two, pullback, leg three. So you can see how this is turning into possibly a major trend reversal before the FOMC. Looks like bears are still trying to get into this area, but still we have not closed below the 50% pullback. So I'm gonna give them a room here to deliver if they fail. And in fact, here's, I have, let me see, measure this. That's my 1-to-1 target. I don't know if we're gonna expand in there, but this is where I'm going to scalp. I'm still short from under 31, even though it's a late entry. I am short. So I want to scalp here, and I want to take some profit there. And if they want to continue, that's great. I will have a contract running into the 66% area. But I'm more interested in the 42.2850 to 29.50 area, somewhere in there. I'm front running my scalp, so hopefully they will give me what I need. I'm going to take a look at the questions. Unfortunately, I'm not as a good multitasker as Tim Stout, so he's just a Superman. He's just, I don't know how he handles it, but when I'm in a trade, I can't do questions, so I just scalp. So I'm happy to now look at some of the questions via the GoToMeeting webinar question window. I apologize. Unfortunately, my attention gets divided. We're all different people, so you're gonna have to excuse me there. Okay, so let me, before answering questions, let me go over the lay of the land here. So basically, this is my daily chart, and I want to go through this real quickly. For some reason, my application decided to lag today. So let's give it a second. I was hoping this wouldn't happen. Okay, here we go. So yesterday in the trade room, I marked this low right here, and I said, we are below these, you know, this low is here. Let me actually if the daily chart actually cooperates, I'm going to show you guys what that is that I measured. All right, I know it's going to work in a minute. Okay, so basically I measured from last year. So this is a 50% pullback. Last year's October and this year's July 27th high. And you can see there's a lag here. Things are moving. So we've tested underneath that, but we do have a wedge here on the daily chart. So we got a leg 1, leg 2, leg 3. So this is kind of an exhaustion for bears, and it's a really good place, you know, for market to, especially there's a gap here. You see this gap right here? Okay, so this gap, when we test this gap, even we have bear bars, there are always buyers waiting there. And that's why this is such a great place for market to actually reverse. And we have been talking about this, whether it's a weekend reports, which you should all sign up for on the Brooks trading course website. And we all expected some kind of bounce here. But the problem with this bounce is that we are running into overhead resistance areas. Okay, and because this is a very climactic bear channel, this is the first breakout of that bear channel. And there's possibility that if market wants to go and test these October highs, and then furthermore up to the July highs, it needs to form some kind of a double bottom, higher low trend reversal. So it is possible that this area that we're testing right now, I said yesterday we're going to test this, and yesterday's bar actually did test that low. It's 42.12. We are now above it. So that means market wants to go higher. So this day, this bull doji, okay, if you actually measure from high to low, that area is a sell zone. Market is trying to get to the EMA. However, we do not need to touch the EMA. We could actually, with FOMC being the catalyst, we could actually sell and form that higher low and then go back up. Okay, obviously this is a daily chart. So today is right now a bullish doji. We are looking for some kind of a support and resistance. And FOMC being the news day, and doesn't matter what news bar, okay, or what news event, FOMC works exactly the same. So always remember this, news bars will always respect resistance and support, whether on the 5-minute chart, hourly chart, or daily chart. You find some kind of a resistance, which is right here, or you find a support, which is right here, right? We filled this gap, and then we broke out. So if we go up, that's where we're going to get rejected. And then the same bar can come down and test the support, and we could actually close in between, who knows? But, or we're going to form that pullback, and there's a gap here. These gaps will always close. So we might actually end up closing that gap. And then maybe tomorrow, if we close the bar bullish, tomorrow we could continue going up to the EMA. Okay, so this is this never changes. I leave it alone, and you can get this chart directly from the blog. And then I have the hourly chart. Okay, so here my thinking, this is a RT8 chart, so it's only showing you the US session. Okay, so basically this is Monday, Tuesday, Wednesday, Thursday, Friday. So what I do is I take the last week's range and I divide it. Okay, so I have the last week's high, last week's mid, and last week's low, right? So we bounce, we have a gap. You can see there's an inverse head and shoulders, and I told everyone, yes, we have a beautiful buy signal bar, but expect a pullback and look for another buy signal bar. I was hoping that this buy signal bar would actually touch it. Now, bulls saw this one as sufficient enough to buy, but this right here signaled me that we are going to go higher and we are going to get a measured move to the upside. And that's exactly what we're doing right now. So if you measure from here, and that is the measured move, right? So you have a breakout, bull breakout. So let me do this the right way. I'm trying to be conservative. Here is the first breakout with a bull body, then a pullback. So this is now a swing. So you could have bought this and held, And I think the market is trying to go to the 1-to-1 target. There's a bit of a gap there. Bulls want to close that gap and continue to go higher. But there are also sellers waiting there. Because what you see here is actually a form of this on a higher time frame. So you got a bull bar and you got a bear bar. When a bear bar body overlaps with a bull bar's wick, okay? So this basically forming the wick, this is forming the bear body. This is a gap and there are sellers very heavy waiting there. I do have this going on here. We could reach there and most likely we will. So you have a leg 1, pull back, leg 2, pull back. We could get the leg 3 and then we could start to come down from there. So I'm kind of timing to see what the FOMC bars can do. We're looking for a resistance. We got one. We're looking for a support. We got one. The nearest one is right here because why? This is a bull gap. Bull gaps are where the buyers are waiting to buy. Okay, so this is where they're going to buy again. Bear gaps are, this is where the bears are waiting to sell. So the limit bears are waiting there. So here's our for FOMC bars, resistance and support. I mean, I don't know what will happen. Anything can happen, but right now, this was my target. Okay, so I kept telling people, do whatever you do, buy into that and take profit. We moved above it and we're now pulling back. Can we go higher? I think the market is trying to reach possibly this area. I'm going to mark that. Or could actually be a little bit, or that area right here. I was trying to be, I'm always conservative with my targets, okay? So we could not only reach this line there, we could just extend a little bit and then come back down. So I'll take this. See, this area looks very good for bulls to keep pushing higher and then reverse back. And that's what the FOMC bar is going to do, okay? So I pay attention to the last week's range high, low, and mid big time, okay? So we are above the mid, but we are definitely below the high. So we have targets above. And then I have the Globex chart, which is the 15-minute chart. This is the simplest way I can put, I put this chart together. So basically what I look for is midnight open. 6 p.m. open. This is Asia. I take the 7 p.m. Eastern time to midnight. And this right here is the midnight open US marks. And this right here is the Asia mid price. And I look for, if I'm trading the European session or I come in pre-market US session, I'm always looking for traps under and above the Asia. And look, there's 1, 2, 3 wedge, 1, 2, 3 wedge, and bears trap the bulls in the London session. Look, it goes up, traps, and comes down, right? So you have actually a trapping pattern, right? With higher high, bulls, higher high, comes down, but it cannot make a new high, comes down, right? So now I'm looking for bulls to trap the bears. You got a wedge here, 1, 2, 3, 1, 2, 3. So you have nested wedges. Okay, I actually traded this morning. This was amazing. So we've been bullish, and then I had a really good measured move target. Now that's 1-to-1, and then I go for 1.5 to expend the profit taking. That actually exceeded higher. Now I could have gone for 2-to-1. I actually marked a 2-to-1, but before then we have a strong, fresh, a sell zone. Look at this. See what I mean? This is that wick. This is that bear body. Therefore, this is a sell zone, aka supply zone. There are limit bears waiting. We're probably going to retest it. Okay, so we're probably going to go there and retest it. We might even go and test the 2-to-1. So 2-to-1 is right up there. Look where it ends up going, right there. So we're bullish, and bulls are not going to let go. It's probably a pullback, and we might come down and test this bar right here. This is the 15-minute chart. and then we could just go right back up. So you got a leg one, pull back leg two. We might need one more leg at the Globex high and then we could actually become bullish again. So so this is how I read. And is for market to become bearish, I generally look for market price to come down and test this key level, which kind of, if we start to move underneath with bear bars, I look for Globex low to be tested, and I look for a breakout from the Globex low, and I look for target areas. So anytime we're above this key level, we are bullish, always look to buy. Anytime we're below this key level, which is Asia mid and the US open midnight, I'm looking to buy always. Anytime we're below, I'm looking to sell. So I'm going to leave that 2-to-1 because it's after a third leg down, we could actually start to go up. So here we are. I'm at my target. I actually scalped. Market gave you twice the chance to scalp that area. Now, how do I know this is going to continue down, or can it continue down? Yes. So what you do is go one more. So that's the 21. So basically, I'm looking for bears to actually close a bear bar, either this low or that price point. Either this bar is the tested the 20 point. This is the 20 point. And if we get a bear bar closing around here, market will continue further even down. It doesn't need to stop here. Okay, so that's what I'm looking for. And in fact, I'll measure it right now. Approximately, market could go another 5 points down if we close a bear bar somewhere below this bar. And then we will continue here. Can the bears actually bring us all the way to open of the day? Well, we already made a leg one, leg two, leg three. So the market cycle says this might be actually an exhaustion. And if we cannot close a bear bar, chances are market is trying to make a 5 to 6 point above, create a trend and go another for 10 point, 20 points. So it can put us into this trading range until the FOMC. So I'm watching right now to see if we're going to be able to close a bear bar. So if we do, we will continue to come down another additional 5 to 6 points, possibly get another 10 points, but we'll see. Okay, so I'll take a look at the questions. So Asia session, Winnie, is I take the 7 p.m. Eastern time to midnight. That's my Asia. So I see your daily charts using 1443 minutes. Yeah, how many day loads should use the daily chart? That's up to you. Basically what I'm doing there with the 1443 minutes is I'm trying to mimic the L Brooks's chart. Okay, so he uses a different application. I use NinjaTrader. So this helps me mimic the RTH setup. So basically here is my setup if you want to see. There's a little bit of lag on here. I think it's the GoToMeeting slowing down my machine, but just give me a second. This will load up in a second so I can show you the setup. The next question, as it loads, I'll take a look. So your Globex high and low from the overnight session. Yes, that's exactly what you're taking. It's right from the after hours, 6 p.m. Eastern time, market begins. So basically you're looking for a high from there and you're looking for a low from there. Rose, can you explain what you mean by you can scalp here? Are you closing some of the trade? Yes. So when I say I'm scalping, I could be doing two things. I could be paying myself, I'm taking profit, and I don't see a bar closing strongly bearish. If I'm selling into that zone and you know, I'm looking for my profit target, if I don't see a strong bear close, I'm just going to I'm going to go flat most likely and take whatever I can. But if I see a really strong good close, I will probably going to scalp, but I will leave a runner. So I don't leave a runner. And here, let me show this first. Yeah, there's a, I don't want to waste time with this. I can get back to you with the screenshot of my data series, okay? right now this is just taking too much of my time as it's lagging. I don't know why. Generally it doesn't do such a thing, but it picked the day, the FOMC day. So now I need to, I'm trying to figure out why this is happening. I might need to kill some of the programs here. Just give me a second. I'm gonna try to close the Discord. Could be slowing down. Yeah, I'm not sure why it's not working, but so give me a second. I'm gonna turn the screen off to see, investigate a little bit why this is taking too long. Might need to relaunch, but at this point, bears took their profit, so they're looking for, so measure from the low of bar 34 about 5 points, okay? Measure from the low of bar 34, 5 points, and see if a bar closes above 6 point. If bulls manage to close a 6 point, they're gonna go for a 10 point at the minimum. Okay, so it looks like Ninja Trader is not responding, and that's because of probably the load. So I'm gonna try to close it and relaunch it. So just give me a second, please. But in the meantime, I'm gonna walk you guys through. So mark that and see if the bulls can actually close with bar 37, a bull bar. If they do, they're gonna zip through the 10 point very quickly. Okay, so, and there will be a lot of scalpers there. Again, from below the bar 34, low, measure a 10 point, measure a 6 point, and measure a 10 point. See if the bulls are actually exceeding that 6 point. Chances are they're going for the 10 point at the minimum. Okay, so in the meantime, this doesn't happen every day, but it's just when it happens, it happens. So I'm gonna end this Ninja Trader and relaunch. Okay, here we go. Meantime, I have Thinkorswim and TradingView open, so I can answer questions from there. How can I better understand where price can test during the trading day? Well, there's so many different ways to assess that, right? So there are so many different variables. I mean, price moves. Okay, so depending on what market you're trading, every market has its own characteristics. I trade the S&P, okay, because you know, I wanted to know the market that I'm trading inside and out. I'm gonna activate the windows in a minute. I'm just launching the, here we go, application. Here we go. So my advice to you is that if you're going to trade one market or two markets, learn which markets these are. So for example, I love trading oil, I love trading NQ, I love trading S&P, but if you ask me to pick one, that would be S&P. It's like having a relationship with someone, right? You want to know the ins and outs of this person, their pet peeves, what triggers them, what makes them happy. So trading a market, a certain market is like that. You have to understand how price moves so that you can react to it, or you can figure out what it will do ahead of time. It's like knowing your husband or your wife, you know, what upsets them so you don't do wrong things. So it's like trading S&P is the same way. I will take S&P over any of these markets, but I sit down and I figured out in years how to trade all these markets. Each and every single one of them moved a certain way every day, exactly the same, exactly the same. And I accomplished that by point counting. And ask any member here and they will say, I'm pretty much dead on with my targets and the conditions. Like for example, I'm gonna give you a quick preview, but if you wanna learn all about this, you can join the the month of November membership, and I can give you all the information how to trade the oil accurately by just counting points, or NQ or S&P. So here's okay, here we go. So market moved is about 5 points, right? I did say mark that 5 point and look for a bull close. but really I go for additional, because 5 is a scalp. So you can see the bulls are scalping. They're buying in the profit zone, and they're buying into the profit zone because they know these bears are going to take profit, but they're scalping. But there are not enough buyers to create a trend here. They have to actually go beyond 5 points. So if you actually put this in here, you're going to look for bull bars closing, and chances are if they start to close, they're going to go for 9 or 10 points. Why 10 points? Because 10 points is a minimum swing, okay, on S&P. You have these minimum swings on oil and NQ, completely different numbers, completely different points, okay? But I did the math over the years. I tested it years, so I know exactly how these guys move, and it's so easy for me to go in there, scalp or swing, leave a runner, or exit out of the trades when I see that this is nothing but a scalp and it's going to continue into the original trend, such as this right here. This was nothing but a scalp. There's nothing else here, and bulls may not be able to reverse this. So where's this going to go then? So if this is 20 points, right? This was my 20 points. I'm looking for additional 10 points. But first I want to see 5 points, see if they can actually continue to close bear bars. But you can mark another 10 point and look for market to come down to this area once you start to see bear bars are closing. So I count, and I have a high rate of success with this almost all the time. I don't even miss a trade with this kind of method, and this is what I use. And basically this is the same thing as Al does. For example, is anybody who bought this bar now is stuck. What are they going to do? Al starts to count how many points the market, or how many ticks, but it's really the points, the market is going to go. And that is a scalp. But if they exceed the scalp with more closes, then he's going to look for a swing. And in fact, these bulls are now stuck here. And I said this is a bear flag, right? So they're trying to get a additional 5 points from here. Watch. When we get to that 5 points and we close a bear bar below it, they're going to maybe pull back a little bit, but they will continue to come down here. I do have a measured move target 1-to-1. So 25.50, we're going there anyway. That's your swing. Anybody starts selling here is expected a bear flag to create another bear flag. In fact, we could create a third bear flag. This is a much bigger head and shoulders pattern. Market is trying to come down to the open of the day. So the entire day is now turning into a trading range. So it is high probability that we could actually come down to the open of the day today. So the target is 25.50. I'm looking for a follow through into the 5 point mark. If we start to close bear bars, expect another 10 point. That means 30 points. We don't need to stop there. Market will actually try to get a 20 point out of there most likely. So bears are in a swing. And if you are swinging this, this is where you expect market to come down to, AKA support. So market could be getting ready, okay, before the FOMC is trying to come down here. Here's what happens in the FOMC, okay? We have a resistance here. We have a support here. You need to mark your resistance and support. Look at the resistance. So I'm going to mark that. And I've seen this FOMC days over and over and over, okay? So let's do this. Big support, I mean big resistance. So take that. Oh, look, we just tested it. Look at that. Okay, so this is, I've got nothing. Okay, let's make that red. Okay. And then I need a support area, perfect area, breakout, coming back to test, right? Look, we made the 5 point. So I no longer need this, get rid of this. So we made the 5 point. If they close that bar just like that, is we're going to continue into minimum 10 point, and that's where they're going to take profit. I'm point counting. So they're already taking profit, but the moment they close this below 5 point, a bear bars, expect follow through. So market is selling, continue to selling. So here's leg one, leg two, maybe leg one, okay, complex leg one, pull back, leg two, pull back. We're already in the leg three, but we are not done yet. So there's a open of the day is magnet always. So we're getting there almost. I have is high of yesterday is ledge that's formed 1, 2, 3. We opened up above it. What is the ledge? So if you actually study the ledge, 80% of the time, if there's a ledge, if it's a ledge top, we will go and test one tick above it. But you should also expect 80% of the time the price to return to it. So we're in that 80% probability. So where's my support? So I want to find my support for FOMC, and I see it right there. Okay, here is these. I'm going to take this whole area as support. So let's do that. Okay, so what I'm looking for, I know there's a lot of things, but I'm just trying to cramp so many things in 2 hours to give you guys an idea. Okay, so let's 5 points, right? We're already exceeding the 5 points, but I need a bear bar. I need a bear bar. So there is about 50 seconds left. If the bears actually close that bear bar, we're going to come down furthermore. If they fail, then this is it. We can finally reverse back up because we do have 3 legs down. And this is actually still a support area. This is a mini support. Why is this a support? Well, look, market went up, came back down and broke out, right? So this whole area is support. We could test these lows, run some, sweep some liquidity. What is sweeping liquidity? Some of you probably heard it the first time. Is when you see bulls buying, where do you think they're going to put their stops, right? So if the bulls are taking out certain highs with strong bull closes, they're going to immediately move their stop from down here, here to here. Okay, so this is an actual stop that the rest of the market sees it. Look, is this high, we have a breakout, but we don't have a follow through. Do you think everyone's going to put their stop here? If you do put your stop here, you're a skunk. What we call it is it's actually a skunk stop, what Al Burks calls it. It's a place where you should not be putting your stop. It is not a major lower high or higher low, okay, or lower low or higher high. So if it's not a major place, it's not a safe place. Most likely they will come and run your stop before going up. So look, they started to run those stops. So your stop should be either down here, is maybe underneath 9, maybe here, maybe here. Okay, so I would generally put my stop right around here. Okay, so let me clean this and show you. But at that point, I'm not seeing any of this. Okay, I'm only seeing this. I trail my stop here. There's a gap here. I'm thinking the buyers are going to buy and we're going to bounce even if it comes down. We did not make a decent breakout. It's a trap. We come down because anybody who bought above this bar trapped. So what are they going to do? There's a tight trading range here. Trading range lows, buyers buy at the 13 low. They bought again. They had a break even, no bull bars closing where they originally bought, which is the bar 15 close and above. If we're not getting any bull bars, that means bulls are in desperation mode. They're trying to break even and exit out. Look, no follow through. That means you need to exit. If you're still long, you need to exit. Your stop is still here. You exit, you're done. You get this bar, say you didn't exit for some reason, I don't know. Then this bar comes in. This is it. There's nobody left here to buy. This bar comes in, everybody's either giving up or there's nobody to buy anyway. All the bulls are exiting the market. They're turning into bears. Okay, so if you hold this, you're going to get hit. This, you're being stubborn, holding a stop here, still being in a long trade. You see this, you still have time to exit. Just exit and sell that, okay? Stop above, go for 1-to-1. That's it. That's all you have to do, right? So, and this is what they did. There's the head and shoulders. We come down, those stops ran. We went up a little bit, but this is nothing but a bear flag due to this gap above the EMA. This turned into a major trend reversal with several legs down. I kind of warned people hours before this happened. When this bar happened, I told everyone this is going to sell, and most likely it's going to become a major trend reversal, and that's what we are in right now. So we got a 5-point plus, but we could not close below that 39 body did not close below 5 point. Now we do have a gap here, so we have, I generally count the bear legs, bear flags. Here's a flag, here's a second flag, or you can say this is the earliest bear flag, second one, third one. I generally look for only 3 flags. The 4th flag is exhaustion. We could get that. We could get that flag. Or you could say this is a failed bull flag, right? So first buy, second buy. Or if you start counting from here, since we made a new high, this is your first high, comes down, goes up, second high, no one's buying. When a high 2 fails, that means it's a bear flag. It's actually going to sell, right? So what you do is you can measure this tight trading range high. You can look for a 1-to-1 target right there. So, and we just got it. Look, 31.50, that's your 1-to-1 right there. And here's the same thing, is bulls are trying to buy high 1, high 2. Why would you want to buy against this bunch of gap bars? You don't want to do that. So the bears see that and they're like, we're not dumb. You guys are dumb. We're just going to sell and we're going to go for a 1-to-1. Okay, so this is how I measure also 1-to-1. I point count, I measure 1-to-1, measured move targets. And when I see bears are making money and the bulls are not making money, we are now turning into one big trading range right before the FOMC. All right, so what's happening here? Is this too low to sell? Well, it is. You're selling into a support. Nobody wants to do that. You're also, I'm showing you the condition that bulls totally failed here with not able to close above 5 point. Therefore, we have an intact bear trend, wants to get more than 20 points. They actually get more than 20 points. So it's at 25 points, right? So look, it's actually 26 and 50, but you generally measure where these bars close. So it's just about 25 points. It could still continue. This is still a bear flag. There are probably sell orders underneath 39, now moved underneath 40. Bears are looking for a follow through, okay? But really strong inside bar, 40, could be exhaustion because we have been coming down with several legs. Some bulls bought above it, okay, is because it's a strong inside bar. And they're looking for market to go and test. It's probably right here. And we could, in fact, go there. But who's going to buy? I'm probably not going to buy it. The only time that I look to buy, whether it's testing some kind of a zone, profit-taking zone, 10 point, 15 point, 20 point, 30 point, 40 point, or it's a strong support, or there's exhaustion, okay? So that's what I'm gonna buy. And then I look for a bar with either no upper wick, an inside bar, strong bull body, either no upper wick or a small. So look, there is a good body with a small upper wick. Those are buyers stacked above, one tick above bar 40, wanting to buy and they want to test these, okay, or maybe the 37 low before market comes back down again. But there are also sellers wanting to sell, get in. They're trailing their sell stop orders underneath bars, and they're hoping to trap the bulls, and they're hoping for a bear body, okay, and another bear flag, sweep their sell orders underneath this bar and give them a 2 point and then some more. Okay, so market is still trying to get to the 30 point possibly. But we do have a wedge there, okay, overshoot. You can count it that way, or you can say, no, I think I'm just going to count this, overshoot, undershoot, doesn't matter. There's nested wedge here. So you can see bulls are trying to buy here. Now, what do? How far can this go? I'm looking for targets. Okay, since we're no longer selling below the threshold, I'm going to mark and I'm going to give bulls a benefit of the doubt and see if they can actually move the market 5 points. They're just about to get to the 5 point. What am I looking for? What's my criteria? It is 6 points, because if market scalps 5 points and give you additional 1 point, that means it's setting up some kind of a trend, and it wants to swing. So that's that. So what am I looking for? If we close above that, chances are you're going to get a really nice scalp right around 9 to 10 point. I generally mark the 10 point. It can even go higher, but from 9 to 10, I try to take profit. So I'm looking for a bar that closes above 6 point, and I'm thinking maybe I can buy this and scalp a little bit. So basically, I'm doing a scalp within a swing. Okay, so you could have bought right in this zone, okay, or at these lows, maybe a 9 low. That would have been a limit order entry, or your stop order entry is bulls entered because they saw a really good signal inside bars after a wedge down 3 pushes. Wedges can be 3 pushes, or they can get a 4th push. Wedges can have 3 pushes, but the third push could be truncated like this. Okay, but that's still the 3rd push before reversing back up. But you can see 1 or 1, 2, 3 is maybe down on this, up on this, down on this, up on this, and down on this. There's also nested wedges here. So the market is trying to reverse. But in order to become a bull trend and for you to go in and look for a 10-point swing, I need a bull bar right around here, closing. Now, it went to the 6 point. It's not enough. It can easily come down, make you nervous if you went above and didn't scalp anything, right? And it could come down. And as you exit your long, it could just go up, because technically it can still get above 6 and get to here very quickly. So is 3 bull bars. What do the bulls need? They need 3 bull bars, 3 closes, especially by the close. 41, buying the close of 40. 42 needs to be a bull bar, creates a bull momentum, right? So this is first low 1. Low 1 always fails, just like high 1. If you are high 1, you buy it, there are probably sellers above that bar. That is untimely buying. Second entry is a much better trader's equation, gives you a better probability. And low 2 is the same thing. If you sell at low 2, low 1, you're going to be stopped out. Okay, there are probably buyers waiting. So, but at low 2 is a much better entry. Now, if the bulls get the 3rd bull bar, they're going to get a momentum. And the momentum, you get that bull bar, maybe we go above 41, you still expect a pullback, and then they will buy that pullback, and then we're probably going to go to the 9 point or 10 point right away. So watch that bar. And if it closes bullish, target will be somewhere around 31.25 to 32.25. So I'm waiting for this bar to close, and I'm going to look for a quick pullback and see if I can enter. There are already buyers above 41. People entered above 40. They're looking for a 2-point scalp, and they're probably already getting it. They're happy. So here we go. Market needs to test that 225. In order to get 1 point, market needs to move 5 ticks, not 4 ticks, to give you solid 4 point. In order to give you 2 points, it needs to move 2.25, right? 2.25. So that is 9 ticks. 2 point is 8 ticks extra, 1 tick to fill your order, right? So it has to tick 1 tick above your target to fill you. So they need to actually go and tag right here. The moment these bulls actually able to scalp from above 42 point, okay, they're going to look for a lot more than that. From above the signal bar, okay, now became entry bar, they will now not only look for a 2 point if they get it, they're going to look for a 5 point, in fact. But failure to close above 6, I'm going to expect a pullback. And then I'm going to look into buying again. So first things first, read the signs. We need third bull bar. If we don't get it, this is a low one. Why is it a low one? They already sold above this and it came down and then it closed. We don't even have a low 2. We will get that eventually. But right now, bulls are trying to scalp. They're trying to get some reward here by buying above bar 40. And the reason why this body is oscillating around 6 point is trying to decide if they have the means to go and get a swing all the way up here. So to the person who asked the question, how can I better understand where price can test during the trading day? You see so many moving parts, right? I would say if you haven't taken the course, take the Brooks trading course, which is $399. I mean, we call it a basic course, but there's nothing basic about it. It's basically like a master's degree. And I've taken it, I still take it. I go back and get refreshers. The people who take it, they take it for the 3rd time or the 4th time. But if you want to sample and you're not so sure if you want to spend a $399, there's also the Forex version combined with the basic version is $499. If you want to trade the Forex, it basically Al is talking about all of the characteristics of Forex charts and how the price moves and how he measures and all that stuff. So you can get that as well. But if you want to sample, we have a great actually option for you, which is the best trades that compiled by our Richard, and who also maintains and manages all of the course. He's our lead educator. So he created this course with L. Brooks. It's basically a shortened down version of the entire course. It gives you a great preview. It shows you exactly, L literally talks about how to trade the markets, and you're going to do great if you actually take that. And that's like what, $69 versus $399, and gives you an amazing preview. So I'm going to give you, try to take that course if you are not so sure. It's very important that you understand the price action. This is where you're going to learn. Once you learn all of that, then you come to the trade room. Let us explain exactly how we see it with the Brooks teachings and methods. And then you're going to see, okay, this is where I entered. This is how you watch algos count the ticks. This is where the tick failures happen. This is where the scalpers versus swing traders. This is where the major trend reversal sets up. This is where I should expect a full reversal or 50% pullback. This is where I should actually expect the bar 1 high or low tested or the close of the gap. And this is where a limit order market versus a stop order market, I should be a scalper in a limit order market, and I should be a swing trader in a stop order market. Here's how I get my measured moves. Here's how I get my 1-to-1 versus 2-to-1 targets, so and so. Okay, so for example, I'm going to post it on the Discord, but I can also give you the link here. So those of you are interested in the best trades, which is a preview, I would recommend you to take this. I've taken this course. It's amazing. And here are the modules. I'm going to show you a couple of screenshots so you can decide. Here's the module, and here is what you should expect from this. And then you can move into, if you're not, if you're unsure is about spending the money. In fact, this course should be over $1,000, not $399. But you can also start with the large course, the big course, and you don't have to take this one. So let me post you the link here so you can get that as an answer. Okay, you have the link also on the GoToMeeting, okay? So many moving parts, but eventually you understand what's happening. I'm gonna show you guys. I'm gonna clean this up, and here's what I'm gonna show you where I would have actually entered the short. Okay, so you see a bar like this, it's a gap bar. So our market cycle says this is now setting a trend, expects at least leg or two down, okay? And here's another leg, right? So market is coming down. A gap bar like this will look for continuation always down. Now, if we didn't have a breakout from the bar 23 low, we would have also gone into some kind of a trading range rather than getting this structural breakout. We have a structural breakout here. It's telling you this is going to come down even more. But say we didn't have this bar and we had maybe a bull bar like this, then what you're going to expect is market to go and test the high. And then you're going to find your 50%, and you're going to wait for market to come down here. This is where I go long. This is where I expect failure and bullish trend to go and test the 50% and maybe even higher. And generally this happens when you don't get a gap bar like this above the EMA. Say you got a bar like this, and then you got a bear bar like this, you got another maybe a bull bar like this, right? And then you got a big bear bar. You see, there is almost no gap between the bars. That's the one generally forms a bear flag and then traps the sellers and goes and tests the high and makes a new high. We did not have that. So once I see that, I see this is first entry bears, this is second entry bears with a stop above. They're now selling. They got a major lower high. They're going to take that stop. They're going to put it down here. What are they looking for? They might be looking for a one big one-to-one target, which is all the way down here. So since we're taking out that bear, okay, it's low, right, with bar 33, and then went and tested the gap. Remember what I thought, you guys, the wick and the body overlaps. This is a bear gap, meaning you should be looking for a bear flag and you should be looking for a limit order sell near the EMA. That means we're probably going to take out that low. Hello, bar 38. It's a gapping down bar with a bear close below, telling you this is going to go down. So now you take that stop and put above here. This is your major lower high now. As you trail your stop, you're in a swing trade. Swing trades can go for 20 points. Swing trades can extend to 25, but if they cannot close below 25, bulls can look for a 10 point. If the bulls fail for the second time buying and not able to get a 10 point, we can still continue into the 30 point, possibly 40 point bear trend. So basically you are in a swing trade and you should not give up of your trade unless you see lower highs being taken. So this is a minor lower high. Bulls will try to take it. You should not worry about getting out of the trade unless you see they take it and it comes down and you start to see bull bars closing. Do not let your stop hit, exit, and go for that 10 point, 15 point, 20 point with the bulls, okay? This is when I look to exit. And when I'm doing that, I'm looking at a market structure. So I'm looking for is, 3 push wedge down for exhaustion for bears. So I've got 1 and 2 and 3, or 1, 2 and 3. I'm also looking for is a certain amount of moves, which I found. I'm also looking for a rotation, right? So I have a trend coming down. What happens to a trend? How does it shift? If you have a strong trend, it always goes into some kind of a trading range first. If it's a strong trend and hasn't sold, it probably is going to sell. It can sell a second time, but finally it starts to rotate. It starts to make a higher low and starts to take out the lower high, starting with the minor ones, such as right here. You can then look to exit out of your short. You look for one more time, okay, trapping the bears, and then you look for a breakout to the upside. Look what just happened there. I said if here, that was the 6 point. Did we close above 6 point? No. I said they're going to scalp here because this is a strong trend. We need to test, we need to let the bears try to sell one more time. Bulls are already running the minor lower high. What did they do? What are they trying to do? They're trying to close above the 6 point because they're gunning for 9 or 10 points. So here's the 9. I'm going to mark the 10. And if this bar closes, okay, is bulls are trying once, is bulls are trying twice. If they do close a bull bar above 6, they're going to go for it here. If they fail for the second time, then that's it. We can still come back down. So I am watching. This is where I filter my trades before I enter into any long trade. I want to see the exhaustion. I want to see bulls show me the conditions. Then I can grab a 4.5 point there, and I can look for more and these major lower highs to be tested. Once market starts to run major lower highs, that's where the stops are. Okay, it can even go higher. So we are now forming a trading range here, right? We have a bear trend, but in essence, this is a one big confusion. Market was up, now it's down. Big up, big down, confusion. What does that mean? Sideways. So what time is it now? So it is almost 10 minutes after 1 o'clock. So we are now forming a trading range, a bigger trading range and a smaller trading range. But just like these flags, I'm counting. First up, first down. First up is we're going to come down. We're probably going to make the third up, and that could still become a bear flag. Okay, so sometime around 2 o'clock, we could make a bear flag. We could come all the way down to that support I found, close this gap, and then market can turn around and go back up to that resistance. Okay, so FOMC does this all the time. Or can we get something completely different? Could this be a one big bull flag? Yes. Wedge, bull flag with a gap. So what can the market do? It could get to the 10 point. It could even form a bigger trading range like this. It could quickly break out of the trading range and then form a one big double top neckline and then sell rest of the day. So right now, all I know is that this is a trading range that we're forming, but in that trading range, we're actually trying to make a bear flag once again. So 1, 2, 3 push. We have a slight close is above my threshold. Okay, so the bulls are now looking to potentially get to is the 9 or 10 point. Now look at that. So I bought above this bar. Okay, so I put a buy order, and I'm looking for 9 and 10 point to be tested. So let's see if we can actually get that target. 9 point to 10 point. Nine point is 31.25, and 10 point is 32.25. So 31.25 is right there, and 10 point is 32.25. So let's get rid of that. It's a good try by bulls, and I'm looking to at least test of the 9 point. There it is. Perfect. It went one tick above, gave me an amazing scalp right there. Can it go to the 10 point? Yeah, the bar is very strong. It's probably going to sweep through it, but let's see. It's trying to test the bar 37 high, but I'm more interested in is between the 9 and 10. So you see this? That's the higher low major trend reversal. Again, this time for the bulls, because we have wedge and we have nested wedges, so many of them. However you count, they are there, right? So look, bulls are looking at a bigger picture and they see a bull flag, market has been bullish. So this is a 1D pullback, okay? So they're looking for look at that. We're actually reached the 11 point, which is the highest point of 10-point swing, okay, is zone. And that's happening because ATR is pretty healthy, but this is where some profit taking will happen. If they do get a acceleration, where do you think they're going? Well, look at this. You got a strong leg here, and then pause, another leg here. This needs to take profit, so it's going to come down. And it's going to be either in the form of an upper wick, or the next bar will be some kind of a pullback bar. But eventually, it's trying to go to the bar 29. So I'm going to take this 29 open and 30 high. This is a sell zone. Eventually, we will get there, and there will be sellers. But first, you take profit. Anytime market gets to a swing profit zone, such as 10 point, 15 point, 20 point, it always will want to take profit. Okay, so that's what it's doing right now. And but doesn't mean that it's going to sell. Okay, so I've already scalped. So I scalped some here. I didn't have anything for here. You can leave a runner and expect market to get further up high is to the next zone. Where's that? And that would be starting from 13 point, 14 point. It could go into 15. So it could reach 15, but I generally start taking profit around 14 just to be you know, fast, because you know, I have a small account and I don't get priority. I'm not a hedge fund. I don't work with the brokers. So I have no priority, right? And therefore I have to scalp before the machine scalp, because S&P or any market, you're always trading against the machines. You're either trading against them or trading with them, right? So we're now trying to get to the next one, but we need to close a bull bar here. So what is the next target? I'll put it right there. And your next target will be 30. Well, that's the first one. Oops, sorry. That's it. And then the next one is 1 point above. Give or take, it's trying to go in there. Okay. But that's, you see, that's profit taking still happening right there. So I generally wait for a bar, if I want to go continue to buy, I generally wait for after the profit taking. I wait for bears to stop selling and no other bears to enter. And then I look for bulls to take out these highs, and I can jump in right there. So I am flat right now, and let's see. It's still profit taken. How did I know that? Well, that's how it works. Machines are smart. They know it. But not only that, we're in a trading range. This is the trading range highs. Bears still want a double top and then sell again. But it's a good place for bears to enter and scalp against the profit taking. They know these bulls will pay themselves. So they put a limit order sell right there. And as these bulls are taking profit, that pullback happens. Is a bunch of other machines, okay, also scalp by going short. There's always one side is buying, there's always the other side is selling. So these are great areas for collecting a couple of points into profit taking. But if the bulls are still strong and they're reversing, and they are, we made a higher low and wedge top. So where do you think the market is going to go next? If you have a wedge, and you're going to learn this in the course, first target is always the third leg starting point. This is the second leg starting point. This is the first leg starting point. First we go there, then we come down, right? If we get above it, that's your next target, the second leg starting point. Maybe this is a leg 1, pull back, leg 2, pull back, leg 3. So this was the first target, which we met. Where do you think is the next target? somewhere there. So I'm watching now. What if we come down further? How do I figure that out? So I'm going to ask you guys, those of you who watched me, just measure like a maniac. What am I looking for to see that bulls may not enter for this, but the bears start to enter selling? What would they be looking for? What would be the bears looking for here, other than a good sell signal bar? So you can put on Discords or no, not 21%, none of the. Okay, I'm already getting a really good answer here. But I know this person, she's been here with me so long. So she knows, like, oh, I know that. That's easy. So what am I looking for? I'm looking for a 5 point. Correct answer is 5 point. A scalp for bears, other than a bear signal bar, right? But in order to get a swing for bears, I'm looking for a 6 point close, right? Why 6 point? Why is that important? Well, if you're scalping something for 5 points, that means you're creating a momentum. But in order for some scalp to become swing, you need one more point, one more. When the machines see that and they do the math, they're going to be like, okay, we've got a trend setting up here. There's possibility we could get to that 10 point. So they're going to look for consecutive bear closes after that 6 point. Okay, so but they're not only shooting for 10 point. They're looking for a lot more than that. 10 point is the smallest swing that they can get. So what do? Immediately I measure. So I'm measuring for 5, right? And if I don't see bear bars closing is one after another, then I'm not going to sell. So look what happened here is you got low 1, which is a terrible, then you got a low 2, and a low 2 failed at the low of a trading range. What happens to the low 2s, which is a bear flag, right? Fails at the low of some kind of a trading range. What does that mean? It means reversal. That means bear flag is failing. When does the bear flag fail? At the low of some kind of a trading range. Big up, big down, confusion. We're at the low of some kind of a trading range. And if this low 2 is failing, that's because a reversal is coming. These guys are exhausted. They don't want to sell. But we already knew that way ahead of time before this form. When did we know that? When we didn't see market closing more than 5 points extra after they reached their 20-point swing. We knew that way ahead of time. So you could have actually bought into that and you would get a lot more than entering above 44. You could have entered here with a tiny little stop. So this is why point counting is extremely easy, extremely valid, because it shows you what's coming or what's not coming way ahead of time, like maybe 5, 6, 10, okay, bars way ahead of time. And if you learn that, you're gonna master S&Ps like no other. So this is how I get around. And I time my entries, and I can walk away with really good P&L every day. So I know I'm not answering some questions. I just want to teach you guys, since I have only 2 hours and I have to leave in half hour, is I want to actually open up some FOMC charts and let's take a look at some and decide what could happen. But let me see if there are any questions there. Can you address the scalp versus the close? If you get a 5-point scalp, do you need that to close? 5 point is just a scalp, yes. So basically you're looking for a 5 or 525. So in order to get a 5 point, basically you need extra tick, right? So that's a solid. And if you get that, generally they're going to go for 6. If they don't, that's nothing but a scalp, and the next bar actually ends up being a strong bull bar. You don't need to sell. But look, they're getting a 5 point. So if you actually sold, this is a good signal bar, 46. If you actually sold below that bar, market gave you an early scalp. So you would test right there. You're looking for a 225. That's it. So you got the 225 minimum scalp because you're entering with stop orders, right? So good signal bar, you sold underneath, you got 225. Now market is looking for probably 4 or 5. I'm going to mark the 525. If the bears actually get the 525, bulls are going to be discouraged, is because we could now easily get 6. Where's 6? Right there. Look, we're already exceeding. That 5 is from under 46. That's still a scalp, but I generally count from there. So the bulls are bears are trying to get to the 10 point. Why would they get to the 10 point? Because they're already seeing momentum and they want to close the bar beyond the 5 point, so beyond the 6 point. And anybody who actually sold from underneath this signal bar, grab the 2 point, now they're looking for a 5 point. If they get that 5 point, I'm showing you 2 ways of measuring. At that moment, they're going to close a bear bar, and we're going to get to the 10 point so very fast. See how it's that adding up the math? And we don't need to stop there. Where else can we go? We could go further more, and that would be 13 to 14, 15 points. So I'm just going to measure the 14 point. You can measure 15. I'm just averaging it, right? So look, they're already pretty strong here. Why did this happen? This started as a small scalp by bears at the bullish profit-taking 10 point, right? So that was a 10 point. So, and then other bears started to enter the market. Why? Because this is a major trend reversal. They're still looking for a double top and lower high, and they're looking for another bear flag. You could also say this was the low one, now this is the low two. Therefore, this is the actual bear flag. Anytime you get a low 2 double top, that right there is a bear flag. That could actually succeed. So the bears want 10 point. They not only want the 10 point, they also want to break the 35, and chances are want to get down to the 13 or 14, maybe even the 15 point. So scalpers is from below the signal bar already got a already got a 5 point. So we reached a 525. 525 is 5 point plus 1 tick to fill everybody's orders. They got a lot more than that, right? They got a lot more than that. So this is very successful bear trend now started. It's not only going to get to the 10 point when you measure from the pivot level. Other machines are now looking for, okay, we see the scalpers are making a lot more than 5 is from under a bar, is most likely we're going to get the 10 point, and then they're going to try to get the 39 low, break of the opening bar 1, opening tick price, okay, or the session open, whatever you call it. Okay, here we go, 10. Look at that. Now, that is not coincidence. That's right there is bear getting paid. 10 point to the tick. You see how easy it is? You take a profit. I generally front run it 1 tick above. I get what I get, and I'm out. I can always leave. If this bar closes bearish, I always leave a runner. Then I'm going to add more as they take out these 10 point furthermore with the good closes. I'll keep adding. I'll keep adding until it gets to here. And then I scalp. So now my, I don't know, $500 P&L becomes $1,500. Okay, so I'm constantly adding, subtracting, because I'm scalping within a swing, right? But look, they're taking profit. It's also the low of this trading range high, trading range low. Bears are not stupid. They know this is a 10 point. They know this is the low of the trading range. It is not guaranteed that they're going to break the 39 low. They're like, let's get paid. So this is where they're getting paid. Now, after they get paid, in about 2 minutes, so maybe the last couple of seconds or 10 seconds, this bar starts to close bearish. There will be more bears wanting to sell, break the zone, and get to the next one. Okay, so this is right now profit taking. So other bulls who are stuck up there, buying low, what are they doing? They're trying to break even. So if you're a bull, you were still long, you're targeting right there, and you were not expecting this sell-off, what are you going to do? Well, you're going to break even. If you're stuck up here, maybe you bought right here, just like I did, and then this happens, you're completely dumbfounded. You find a good buy signal bar and two bull bars, right? So 1 and 2, 44, 45. Somewhere down here, maybe underneath that bar, maybe that bar. I'm just going to average it. Where's your break even? It's right there. So they got their break even. Others who are stuck with the close, maybe they bought that. That's too, I mean, you should never be buying into that double top. They got their break even. See, it's even easier to fix a bad trade going wrong if you're on the wrong sides. You just simply wait for market to come down to a support and you buy. But why did this bar came down so fast like this? What was the reason? Why did the 47 happen? There's a fundamental reason that it happened. Why is that? Other than point counting, nothing to do with the point counting. Why did this accelerate all the way down? It didn't need to sell. Bulls could have take this further up, but suddenly bears showed up. Nothing happens for a random reason. So there's no randomness in the markets, not in the way that we read the price action. And this is what you learn either in the big course or the best trades. What's the reason? Bears, yes. So Winnie over here, I think pretending that he doesn't know about price action, but seems to be answering all of the questions wonderfully. So we're just going to pretend that he doesn't know anything. But he has the answer. So what did he say? Look, bears are selling, right? But what did I say? If this is too low to sell, there's a support here, right? Early support. Look at the breakouts. You have consecutive bull bars. What did I call that area? I called it's probably a demand zone, right? What happens at the demand zones? You get stopped out, right? So bulls start to buy. So what happens to those guys? You look to you start to look for signs of traps. The bear traps. Bear trap means, if you're new to the concepts, bears getting trapped. Bulls setting traps to trap the bears. Okay, so generally it happens at the lows. Bull traps are where bears set up traps to trap the bulls, but before it sells, it generally gives one chance to bulls to break even. And the same thing happening right here, right? You got wedge top is up on this, down on this, up on this, down on this, up on this, or up, down, up, down, up. No matter what it is, you know exhaustion is coming. So the bears are laying traps to get a bull trap. What is a bull trap? Bulls getting trapped. Bulls got trapped here. So what are they going to do? They're going to buy at some low of a trading range that formed, and they're going to look for a break even. Anybody bought obviously above 15 got trapped with 16 wick. Immediately closes bearish. You're not going to panic. What are you going to do? If you panic, you're going to miss your chance to fix it. Look, you got multiple bull bars. Start to put buy orders underneath them. Not this one, definitely this one and that one. So I'm going to average maybe somewhere underneath 14 or somewhere in the wick of 13. Okay, look, that's a break even. That's a break even. They even brought the market all the way to the close, but not able to get above there. So market is forgiving you. Same thing is happening right here. Bears are trapped, right? So they're dumbfounded. They sold at the breakout test level. Those are the smart thinking, fast thinking bears selling, okay, and breaking even. You are a bear. You sold this close. You sell right there. I'm going to mark this. Market comes down to here And look, it goes and it comes down. And look at this bar 42. I'm sorry, 43. Look at the low of bar 43. What is it testing? Exactly where everybody sold the close of 39 and got trapped. That is not coincidence. Just like this is not coincidence, okay? They're testing. But the one thing that the bears are not able to do, close a bear bar below that low. That's nothing but a break even. Get the heck out. If you don't get out, if you haven't gotten out, you're still waiting for market to come down, is if this bar closes, get out. Don't linger. This is gonna double the size of this bar to the upside before selling again. Okay, so now those guys who did not get a break even will sell maybe 5 points, is this bar that they got trapped, maybe 5 points, 10 points. Look, 5 points above, they started to sell right there. So what are they trying to do? They're trying to break even. Where's their break even? Measure it. You're stuck here. You sell the first bear bar close, that's great, or underneath. Market not only gives you a break even, it's trying to get back to the 39 close. If the bears now close a bear body below the 39 close, they're going to take out the 39 low and they're going to go to this target right here. It's not that difficult to trade. It's just that you have to spend some time is watching all of this. Or if you really want to learn fast track, I would definitely recommend it first to take the course, then go to the brookspriceaction.com website, which is our trade room website. Sign in. This is what I did for years. And sign in, create a sign in. And you don't need to join the trade room. Go buy the old recordings of Al Brooks. They're extremely inexpensive. Can actually mark them down. So, and watch them like you're watching a Netflix, movies. Just pick a week, pick a month. Start with the first day of the month or first day of the week. Go through everything. Al Brooks goes through bar by bar. Why there are sellers, why there are buyers. How many ticks failure means it's nothing but a scalp and not a swing. What is a low one? What is a low two? When to enter? How much to scalp? What is the market structure? What to expect? What happens when market starts to close below the bar 18? Consecutive bear bars. What are the probabilities of market actually coming and testing the 50% of that day and making a new high or making a new low? These are the things you learn on an RTH, regular trading hours chart. And as you trade day by day, less than 6 months or a year, you're going to become profitable. That was my journey. I started seeing progress, okay, in my trading. I was just doing stupid things. I thought I knew price action. I didn't know anything. So once I started to learn what machines do, I started to trade with them. So let me show you what I mean by, just give me a second. Okay, so let me log in here. So go to the brookspriceaction.com, log in. You're not going to be able to log in. You have to first register, and Ken will send you the confirmation. You go in. Once you go in, okay. Once you go in, you go to the subscription right here. Okay. Hello, why is this not working? I know I signed in, but give me a second. Oh, it's loading. Sorry, the website is still loading. It's probably overwhelmed because thousands of people are hitting this website right now. So just give me a second. Oh, here we go. Okay, so you go to the subscription right here. So current membership is webinar access. non-member groups. Drop that down, and it goes years of years, and we actually bundled the years for almost nothing. I mean, look at this. You get quarterly, okay, 3 months for only $100. 2018, 2019, 2020 is, I think, somewhere around 2021. I'll kind of reduce the days, but still you get plenty. But before 2021, you get almost 20 days a month. Is get these, build your archive, build your live video archive, and watch them. And as you listen to Al Burks, you're gonna learn so much. But key is to take the course, because if you don't understand, you're not gonna be able to ask questions to him. You're not gonna understand the market cycle. You're not gonna understand his terminology. Just take the course. At least take the best trades, the short course, and then things will start to fall into place. That's what I would recommend if you want to get serious. We don't have annual subscription, but we have month-to-month. Maybe in the future we might do it, but I don't know. Best person to answer is Ken. Right now it's month-to-month, so it's basically $4.36, and you get all the recorded videos end of the day for free. So they're all yours with the monthly subscription, so you can just download them. All right, anyway, I want to go back to the price action, and I want to keep trading. All right, so we formed a bear channel down, and now we have a trading range, right? So it's a market cycle, but there's also channel here. Maybe I can take that, right? So we're at the midpoint, and we could go up and sell again, or we're gonna sell now. I don't know, but we do have right now a bar 49. Look what the bar 49 did. It actually took out. So everybody who got stuck here sold higher, made money. So the bears started to make money once again, right? So even the ones that they were actually losing, making money. So what does that mean? This means market can make new lows. So I need bear bars to close below this midpoint rather than going higher. But could it be also is failed bear flag, because this is nothing but a confusion? And could this be also be a wedge bull flag? 1, 2, and you can also count from here. Maybe this is the 1, this is the 2, and this is the third leg, but it is truncated. Yes. If that's the case, what are you looking for? You're looking for this top, the neckline. You have a double bottom, higher low, neckline to be broken with bull bars, and then you look for a pullback and you buy. What are you going to target? The prior highs and this gap right here. But I'm not ready for that, because there could be sellers here. This is a trading range, right? And sellers could still sell. What are they looking for? They're looking for a lower high. They got a double top is at the EMA. It could be even, I wouldn't call this a wedge top, 1, 2, 3, because this is lower than this. So this is nothing but a double top with 37 high and a 46 high. Okay, so we need a lower high to sell. So if you buy right now, where's your stop? And where's your target? You buy right now, your stop, I would put it underneath 36, 39. Okay, so what are you looking for? Bears got their target, 10 point, they're buying. Okay, so they were taking profits. Bears are buying back their shorts. Bulls are entering, because look what they got. It's an inside bar, extremely strong. So chances are, this is what I look for. I immediately measure that, and I look for a 1-to-1 target. That's my scalp. Or is the other way to do is, okay, look, I got a pivot here. So I'm going to measure 6 point. That's a 5-point scalp, and they're even exceeding. If I see that bar close is above 6, they're probably trying to get to the 10 point, right? So There's still 2 points. I don't know where this is going to close. Right now, everybody else is scalping. Anybody who bought above this bar, because an inside bar, as you learn at the lows after a double bottom, okay, and with a tiny little, almost no upper wick, there are buyers waiting. That's a good signal bar to buy. So if you bought above it, what are you looking for? Is probably two point scalp. They already got it. So now what are you looking for? You're looking for about a 5-point scalp. So you want market to get to the 525 to scalp a 5-point from above this bar that you bought. And in the meantime, just measure the 10-point. Oh, look, that's 9-point, but 10-point is also here. Can we get the 10-point? I don't know. We might. So right now is these bulls are scalping, but you're scalping in a trading range environment. So what does that mean? That means you bought low and you want to sell high. You may not get that breakout that fast. In fact, this could be just a leg in a trading range. Find a 50% as it goes up, expect profit taken and a pullback. Then you look for bull bars, then you can buy and look for a breakout. Right now, your job is to scalp. If you bought above this bar, a 5-point. If you're measuring from the pivot, you're looking for 9 to 10-point scalp. Yes, it's just like this. It's unfortunately today I have only 2 hours, so I'm trying to jam pack it with a lot of educational information. But when I'm in the the regular is trading range, I'm basically measuring and I'm constantly calling the entries and exits, because I trade. Right now I took a break from trading, so it's actually costing me money. I could actually double my P&L, but many of you are new, so I'm trying to give as much as information. I go for 3 hours, but sometimes if there's nobody coming after me, I can stretch that 3 hours to 4 hours, whatever. I stay around longer. But most of the time, it's basically I'm calling where to sell, where to buy. I measure and I tell you exactly where to take profit or where it's going to fail, how to break even. If you're stuck in a position, here's how we fix it, so and so. Okay. All right, let me answer this question. Okay. I thought I answered it, but it's not accepting or posting my answer. I don't know why. Let me try. Okay, so for the modules, when you say module, what do you mean? You mean the recorded sessions? Those are with you can find them on brookspriceaction.com. And there are other techniques that I use, like we have bars like breakout bars, such as outside inside, right? So I can show you how the bulls actually scalp and trap, and it comes in, and then you look for a swing. So I have a way of trading. Those are L's, OI, or OII, or IO is I, OO, okay, so and so. So I'm not going to go over those measurements. You can join and learn about them. I trade these balance zones like double top, double bottoms, and I look for swing entries. So for example, market show me a double top, double bottom. This is a tight trading range, aka it's a balance zone. It's about to be imbalanced. So we're going to get a breakout. So what does that mean? It means you are there's a potential of swing setup. So here's your first. If you are worried about selling this, then look for a second bear bar. Put my stop there. I have a way of measuring and finding dead on targets, and I'll show you right now. Here, there's one right there, and I measure this. Okay, so that is my imbalance breakout, right? So I'm gonna take that. I'm looking for a swing trade target. I can be a dead on. Oh yeah, look. So if I actually didn't count anything, I didn't do anything, and you know, I didn't even look at any of these bars. Here's my entry, here's my stop, and I'm going for it. And when the market gets there, I'm taking profit. Chances are it's going to go right back up here. So that's it. So that's your swing target, dead on. You want to learn about this? You're going to have to join the room. And I can apply it any day of the time, any chart. 1 hour daily is 15-minute, 10-minute, 5-minute. You just learn the ins and outs of it. Okay. But let's go back. Is okay. Hey Ortal. It's my buddy. All right, so we're still in this trading range. It's a market cycle. Is if you have a trend coming down, you don't expect a quick reversal. That generally happens with news. Instead, you expect sideways market. Now, it can either sell or it could finally reverse. So how does it reverse? You look for traps, bear traps. We already saw the bears were trapped, but they were able to manage to bring the price back down, so they exited. In trading ranges, Al Brooks teaches that if you are stuck, okay, so maybe you bought here too high, 80% of the time, you're going to get a chance to break even. Market will get to the 50%. 60% of the time, you will get to, okay, I'm sorry, that's for bulls, so let me do it the right way. So you bought up here, right? So you wait for market to come down. You buy at the low of the trading range. 80% of the time, okay, this is your trading range, and this is the 50%, right? So, or I can do it the right way. So let me measure it. You're stuck up here. You buy down here. 50% of the time, you're going to get a break even. 60% of the time, market will forgive you and bring you back to your okay, original entry price, and you're going to be able to actually make money as you were losing. So you learn how to enter, right? So that's what you learn. That's because you're in trading range. But when do you expect a breakout, whether up or down? How do you spot it? In trading ranges, you need 3 legs down or 3 legs up. You find your 50%. If the bulls are actually building upon, that's where you're trapping. You're making higher lows, and you're going to trap and squeeze the shorts out of the market. Okay, so that 50% is important. You also need 3 legs. Leg 1, leg 2. Well, maybe we get another leg 3 before we actually buy or sell. I don't know. It's the same thing for the bears. If in a trading range, you're making 3 legs, right? So here's the 50%. You're making bull legs, right? Bull leg goes there, but not able to get above, and we take out the high, and then you can take out the low, and then we sell. So that 50% important. Now, what do you see here? You got a lower low, you got a higher low, you got another higher low. Now we're building above the 50% of this trading range. What does it look like to you? That's leg 1, that's leg 2. Now they're trying to form the 3rd leg up. Are we going to squeeze the shorts out of the markets? Yeah, it's probably possible. That's what it's trying to do. But we're not there yet. So your job is to look for 2-legged or 3-legged move up to the trading range, and always expect a failure. A failure. 80% of the time, you're going to get a failure at the high of a trading range. Bulls will get trapped, and it's going to come right back to the 50% or to the EMA. So if you're buying right now, you only see 1 or 2 tests, chances are this is going to fail and we're not going to get a quick breakout. And as you buy untimely, and it comes down, you get panicked and you exit out of a trade that turns around and goes high again. So you don't simply buy at the high of a trading range. You always look for failures, okay? So because this is not yet ready. You got leg 1, you got leg 2s, and I don't even see the leg 3. Okay, so if you want to learn all about it, go to the Brooks brookstradingcourse.com. Okay, go to here, type encyclopedia. That's not how it's spelled, Rose. Okay, using the Brooks Encyclopedia chart patterns. We did a huge event a while back. Many of you attended. Go in here this is the, I'm gonna show that in a second. I'm probably somewhere. Okay, so watch this, learn all about the trading range days. That me, just ignore that. Just watch the trading range, trading ranges, trading range days. I go through all of the course. I took everything and put in here. This is really educational. You can learn exactly how to enter, what to look for, how to read the conditions. So exactly what I'm talking about here is in here, and you become a trading range master. Okay, so watch this. Now, this event happened because we wanted to help our members be able to use the Brooks Encyclopedia chart patterns tool. So this is a tool that's Elle's homework, basically. For over the years, him and Richard and Brad, they all been actually developing, maintaining this tool. So basically, it's got parts. Like today, for example, is FOMC. If you want to see how today can actually trade, it's all alphabetically organized, right? So you go to, let's say, FOMC would be under F, and you start that database. You can certainly type here FOMC, and hit enter. And it starts to list all of these, okay, charts that starts with FOMC. You can enlarge it, or you don't have to do this. It's already organized in alphabetical order. Just come down to the FOMC. I'm gonna find that. There it is, FOMC, possible outcomes, and start to browse through and learn about it. So today is not this, definitely not, right? I don't think that's it. That's the start of the day. This is Pacific time because Al Brooks is on the West Coast. I'm on the East Coast. So market starts at 6:30. Okay, so we have a gap up. Market comes down. Look, it's a one big bull flag, right? So if we get above the EMA, we could buy, and then suddenly we could actually sell. Is today the same way? I don't know. And here it is. We actually moved a lot lower. So our day turned into a big up, big down confusion. We didn't really vote underneath the EMA. So none of this is us. However, we did come down, and we're somewhere around here. So the FOMC can do this instead. Okay, so here we go. We did come, but these are FOMC. I'm trying to find the one that looks like big up, big down, sideways. Is it going to come down to the support first and then go back up, or is it going to go back up and then come back down? And that's the kind of day I'm looking for, right? So something like this. We were up, we came down gradually, we're in this trading range, we made one more low. Maybe this is where we are. See, trading range, higher low, major trend reversal. This FOMC day didn't make any difference, but still it ended up closing at the EMA. So this is a one big bear flag for tomorrow, but this probably wants to sell. So this is a bear breakouts. We can take a look. You learn a lot from these. These are basically exactly what FOMC days constantly repeats. Like we are down, big up, big down, we're at the low, and market goes up to the EMA and then sells. Could be that days, I don't know. We came down, big up, big down, FOMC goes up. This is the FOMC, but I'm trying to figure out, could this be the same as going up and then getting a rejection? So all of the probabilities are here, right? So we're already down below. Today could be still bullish because if you look at the overall chart, it looks like a one big bull flag anyway. Now, FOMC in about 2 minutes, I have to wrap it up and go, is gonna hunt for those support and resistance, okay? So don't trade the first 3 bars, let it go, 15 minutes, look for the direction, wait for it to go to the support or resistance, and then take your trades. I'm gonna wrap this up and get going so that Brad can come in. I'm not gonna be able to trade the FOMC. I adopted a little cat, I have to go get her. So I'm becoming her forever home. I have to get my cat, but I will be back rest of the week. And if I come in and there's time, I'll just write up something on Discord and participate. But you guys have a great time. We have a double bottom bull flag. Market wants to go to the resistance probably. Here's the resistance. Okay, so I'm gonna mark that. This area could even go higher, but this is where the seller's waiting. Okay, don't be so sure about breaking above this. We could create a double top neckline and then come back down to this ledge. If market sells, because we have 1, 2, 3 wedge top bear flag, support is here, we would test this support and then maybe bounce. But this looks like a one big double bottom wedge, double bottom bull flag. So we could be very bullish. October 3rd low is always been a magnet. Brad will talk about it. If we get above it, mid-October is right there. You can mark that 42.70 to 275 and a September low. All right, you guys have a great time. Brad will take over. Nice to meet you all, and hopefully you guys can join, and we'll see you later. Bye. Brad is gonna come in 2 minutes. Brad, you can take it over anytime you like. Just kick me out until you come in. Since the bar's already printing, I'll talk about it. So I did say don't buy it. It's looking for, it didn't go all the way up here, but look, it's kind of is right around there. There's also resistance here, right? So it found, but what did I say about this? This was what it was hunting, right? So right here is the gap. Look at that. That gap is actually was the resistance early on. Now everybody's stuck here. What are they going to do? They're probably buying again, and they're trying to desperately hoping that the bar is going to go halfway so they can break even. If somebody bought this bar and then suddenly it turns on them and they bought it right around here, they're going to say they were stuck up there. They're desperately hoping that body is going to hit there so they can get a break even. And that's why this bar is going up now. Even on a news bar, you're going to get a break even if you know what you're doing. So they're trying to minimize the loss, but many are waiting for a price to get up there. So that's why it's just going there. Everybody's buying at the EMA again. You never want to be in a situation like that. That's why you never trade the first 2 or 3. I don't trade the first 3 bars, so I give it a 15-minute, and then I generally get a good direction, and I go with that. Alberts only waits for 10 bars. That's why Brad said that. Brad, just jump in anytime. I'll just sign off very quickly. All right, so if we break this, this is the resistance above. So actually, that's not the resistance. It could go all the way up to here. So the bulls want to break this resistance, okay? And if we do break it, that means we fill this gap with a bull bar, then we take out that high. We take out that high, we're going to get above the October 3rd low, but there are sellers waiting. But if we do, we could actually go a little bit further up. Sellers are very heavy in this area. For bears, they see a wedge top, bear flag, 1, 2, 3. If there is no bull bar, then there is no bull flag. Okay, so just be careful there. Just wait for 2 more bars, and then the regular trading price action will resume. They're still buying is right at the original price, and they're still trying to somehow break even, which is very interesting. Okay, he's ready. Bye.